Advanced Audit and Assurance, Chapter 12, Assurance Services. Section 4.3, Reporting on PFI. A report from the audit or accountancy firm on PFI should contain the following elements. 1. Title. 2. Addressee. 3. Identification of the PFI, for example, by page references to pages in same document as the report where the PFI can be found. 4. A reference to the ICAN. 5. A statement that management is responsible for the PFI, including the assumption on which it is based. 6. A reference to the purpose of the PFI and/or the restricted distribution of the report to the limited number of users. 7. A statement of negative assurance as to whether the assumptions that management have made provide a reasonable basis for the PFI. 8. An opinion as to whether the PFI is properly prepared on the basis of these assumptions and whether the PFI is presented in accordance with the relevant financial reporting framework. 9. The report should also contain warnings, that is caveat, that the PFI is a forecast or projection and the results indicated by the PFI might not be achieved. 10. Date, address, and signature of the accountant or auditor. Example, unmodified report on a forecast. The following is an example of an extract from an unmodified report on a forecast. Report on a financial forecast. To the Board of Directors of Entity AZ, we have examined the forecast, include name of the entity, the period covered by the forecast, and provide suitable identifications such as by reference to page number or by identifying the individual statement. In accordance with the International Standard on Assurance Engagement 3400, management is responsible for the forecast, including the assumptions set out in Note X on which it is based. Based on our examination of the evidence supporting the assumptions, nothing has come to our attention which causes us to believe that these assumptions do not provide a reasonable basis for the forecast. Further, in our opinion, the forecast is properly prepared on the basis of the assumptions and is presented in accordance with indicates the relevant reporting framework. Actual results are likely to be different from the forecast since anticipated events frequently do not occur as expected and the variation may be material. Practitioner, address, date. Example, unmodified reports on a projection. Report on a financial projection. To the Board of Directors of Entity AZ, we have examined the projection, include name of the entity, the period covered by the projection, and provide suitable identification such as by reference to page number or by identifying the individual statement. In accordance with the International Standard on Assurance Engagement 3400, management is responsible for the projection, including the assumptions set out in Note X on which it is based. This projection has been prepared for described purpose. As the entity is in a startup phase, the projection has been prepared using a set of assumptions that include hypothetical assumptions about future events and management action that are not necessarily expected to occur. Consequently, readers are cautioned that this projection may not be appropriate for purpose other than that described above. Based on our examination of the evidence supporting the assumptions, nothing has come to our attention which causes us to believe that these assumptions do not provide a reasonable basis for the projection, assuming that states or refer to the hypothetical assumptions. Further, in our opinion, the projection is properly prepared on the basis of the assumption and is prepared in accordance with indicates the relevant financial reporting framework. Even if the event anticipated under the hypothetical assumption described above occur, actual results are still likely to be different from the projections, since other anticipated events frequently do not occur as expected and the variation may be material. Practitioner, address, date. The auditor may not be in a position to issue an unqualified report. In this circumstance, and after due consideration, the auditor may issue a qualified report or an adverse report, or he may decide to withdraw from the engagement. Subtopic 5. Pro forma financial information included in a prospectus. Section overview. Reporting on the compilation of pro forma financial information. ISAE 3420. Assurance engagement to report on the compilation of pro forma financial information included in a prospectus. Illustrative assurance report. ISAE 3420. Section 5.1. Reporting on the compilation of pro forma financial information. Increasing globalization of capital markets has made it important for the financial information used in capital market transactions to be understandable across borders, and for assurance to be provided to enhance user confidence in how such information is produced. Given this trend, the IAASB issued ISAE 3420 Assurance Engagement to report on the compilation of pro forma financial information included in a prospectus in December 2011. Section 5.2. ISAE 3420 Assurance Engagement to report on the compilation of pro forma financial information included in a prospectus. The nature of an ISAE 3420 engagement includes the following. 1. The practitioner provides reasonable assurance on the responsible parties' compilation of pro forma financial information included in a prospectus. 2. The practitioner has no responsibility to compile the pro forma financial information for the entity. Such responsibility rests with the responsible party, the client. 3. The objective of an ISAE 3420 engagement is to be able to assess whether the applicable criteria used by the responsible party in the compilation of the pro forma financial information provide a reasonable basis for presenting the significant effect directly attributable to the event or transaction, and to obtain sufficient appropriate evidence about whether the related pro forma adjustments give appropriate effect to those criteria, and the resulting pro forma : reflects the proper application of those adjustments to the unadjusted financial information. 4. Applying ISAE 3420 also involves evaluating the overall presentation of the pro forma financial information. 5. The engagement, however, does not involve the practitioner updating or reissuing any report or opinion on an historical financial information used in compiling the pro forma financial information, or performing an audit or review of the financial information used in compiling the pro forma financial information. Section 5.2. Illustrative Assurance Report, ISAE 3420. Independent practitioners' assurance report on the compilation of pro forma financial information included in a prospectus. Appropriate addresses. Report on the compilation of pro forma financial information included in a prospectus. We have completed our assurance engagement to report on a compilation of pro forma financial information of ABC Company by the responsible party. The pro forma financial information consists of the pro forma net asset statement as at date, the pro forma income statement for the period ended date, the pro forma cash flow statement for the period ended date, and related notes as set out on page XX to XX of the prospectus issued by the company. The applicable criteria on the basis of which the responsible party has compiled the pro forma financial information as specified in Securities Regulation XX and described in Note X. The pro forma financial information has been compiled by the responsible party to illustrate the impact of the event or transaction set out in Note X on the company's financial position as at specified date and the company's its financial performance and cash flows for the period ended specified date, as if the event or transaction are taking place at specified date and specified date respectively. As part of this process, information about company's financial position, financial performance, and cash flow has been extracted by the responsible party from the company's financial statement for the period ended date, on which an audit or a review report or no audit or review report has been published. The responsible party responsibility for the pro forma financial information. The responsible party is responsible for compiling the pro forma financial information on the basis of the applicable criteria. Practitioner's responsibility. Our responsibility is to express an opinion as required by Securities Regulation XX about whether the pro forma financial information has been compiled in all material respects by the responsible party on the basis of the applicable criteria. We conducted our engagement in accordance with International Standard on Assurance Engagement ISAE 3420. Assurance engagement to report on the compilation of pro forma financial information included in a prospectus issued by the International Auditing and Assurance Standard Board. This standard requires that the practitioner comply with ethical requirements and plan and perform procedures to obtain reasonable assurance about whether the responsible party has compiled in all material respects the pro forma financial information on the basis of the applicable criteria. For purpose of this engagement, we are not responsible for updating or issuing any reports or opinions on any historical financial information used in compiling the pro forma financial information. Nor have we, in the course of this engagement, performed an audit or review of the financial information used in compiling the pro forma financial information. The purpose of the pro forma financial information included in a prospectus is solely to illustrate the impact of a significant effect or transaction on unadjusted financial information of the entity, as if the event had occurred or the transaction had been undertaken at an earlier date selected for purpose of the illustration. Accordingly, we do not provide any assurance that the actual outcome of the event or transaction at specified date would have been as presented. A reasonable assurance engagement to report on whether the pro forma financial information has been compiled in all material respects on the basis of applicable criteria involves performing procedures to assess whether the applicable criteria used by the responsible party in the compilation of the pro forma financial information provides a reasonable basis for presenting the significant effect directly attributable to the event or transaction, and to obtain sufficient appropriate evidence about whether the related pro forma adjustments give appropriate effect to those criteria and the pro forma financial information reflect the proper application of those adjustments to the unadjusted financial information. The procedures selected depend on the practitioner's judgment, having regard to the practitioner's understanding of the nature of the company, the event or transaction in respect of which the pro forma financial information has been compiled, and other relevant engagement circumstances. The engagement also involves evaluating the overall presentation of the pro forma financial information. We believe that the evidence we have obtained is sufficient and appropriate to provide a basis for our opinion. In our opinion, the pro forma financial statements has been compiled in all material respects on the basis of the applicable criteria, or the pro forma financial information has been properly compiled on the basis stated. Report on other legal or regulatory requirements. Relevant law or regulations may require the practitioner to express an opinion on other matters. The form and content of this section of the practitioner's report will vary with the nature of such other reporting responsibilities. Practitioner, date, address. Subtopic 6, Forensic Auditing. Section Overview. 1. Forensic Accounting, Forensic Investigation, and Forensic Auditing. The nature of forensic investigation and audit. Application of ethical principles to forensic investigation. Procedures in forensic investigation. Reporting on forensic audit. Section 6.1, Forensic Accounting, Forensic Investigation, and Forensic Auditing. In general terms, forensic means used in connection with courts of law. In accounting, the term forensic therefore refers to the use of accounting information for legal purposes. In the resolution of legal disputes, or in disputes that are resolved by a court of law, it may be used in both criminal cases, for example, fraud cases, and civil cases. Forensic accounting. Forensic accounting involves preparing financial information for use as evidence by a court of law. Examples include the provision of financial information relating to 1. Loss of earnings, 2. Settlement of a legal dispute involving the valuation of a business, 3. Losses relating to an insurance claim, 4. A divorce settlement. There are two aspects of forensic accounting. 1. Forensic investigation. 2. Forensic audit. Forensic investigations. A forensic investigation is a forensic audit carried out in response to a suspicion of wrongdoing, usually to prove or disprove certain assumptions. For example, X person is carrying out a fraud, or Y person was negligent in carrying out that piece of work. The objective of a forensic investigation is to obtain evidence that might be used in legal proceedings to resolve a dispute or prove innocence or guilt in a criminal case, such as providing evidence of money laundering. Often, forensic investigations are usually reactive, meaning that they seek to prove or disprove suspicions of wrongdoing and provide evidence for legal proceedings. However, investigation can also be proactive or preventative. Techniques of forensic auditing can be used to identify risk of wrongdoing, and then steps can be taken to improve the situation. Forensic audit. Forensic audit is an element in forensic investigations. It refers to the methods and procedures used to obtain audit evidence in a forensic investigation. Forensic audit may be defined as the process of gathering, analyzing, and reporting on data, much of it financial in nature, in the predetermined context of legal disputes or investigation into suspected irregularities, and, in some cases, giving preventative advice in this area. The terms forensic accounting, forensic investigation, and forensic audit are closely connected, and an exam question may refer to any of these three terms. Section 6.2. The nature of forensic investigation and audit. Forensic investigation and audit are associated with situations where disputes arise or wrongdoing has occurred, such that criminal or civil action is being taken in a court of law. The following general areas may give rise to forensic auditing. 1. Fraud investigation. 2. Negligence investigation. 3. Insurance claim and the assessment of losses. In any of the above examples, a forensic accountant might be called on by the court to act in the capacity of expert witness, providing evidence to that court on the financial implication of a situation, or on whether there is evidence to substantiate claims of fraud or negligence. Example: fraud investigation. In the case of a fraud investigation, a forensic accountant may be engaged to 1. Investigate whether fraud has actually occurred, and if so, to obtain evidence to support that assertion in a court of law. 2. Identify the individual or individuals who have committed the fraud and obtain evidence that can be used in a court of law to link them to the fraud. This work will also involve obtaining evidence to show how the individual or individuals had an opportunity to commit the fraud. 3. Estimate the financial loss that has occurred because of the fraud. The forensic accountant is not a policeman, and it is not his job to prosecute individuals for alleged fraud. However, he will be engaged by the criminal investigation authorities to obtain evidence that can be used to pursue a criminal prosecution, or to conclude that sufficient evidence cannot be obtained. Section 6.3. Application of ethical principles to forensic investigations. The ethical principles set out earlier apply to accountants carrying out forensic work as they do to accountants in every situation. 1. Integrity. In legal disputes and criminal investigations, individuals may be dishonest and tell lies. However, the forensic accountant must act with integrity and honesty at all times. 2. Objectivity. The forensic accountant is paid by a client to carry out an investigation, and the client will presumably be hoping for a particular outcome to the investigation. For example, in a fraud investigation, the criminal investigator who use a forensic accountant may be hoping for evidence of guilt. However, the forensic accountant must remain independent in spite of the advocacy threat, and should seek to obtain evidence to reach a fair opinion. 3. Professional competence and due care. Forensic accountant is a specialized area of work, and individuals should be sufficiently competent to do the work. 4. Confidentiality. The normal ethical rule is that accountants should maintain client confidentiality and should not disclose information without the client's consent. An exception is that the duty of confidentiality is overridden by the requirement to provide evidence when requested to a court of law. Legal requirements for disclosure override the rule of client confidentiality. 5. Professional behavior. Forensic accountants often appear as witnesses in court, and in the public eye, they should display professional behavior and act in a way that is not detrimental to the image of the accounting profession. There are some particular considerations that accountants will have to bear in mind when carrying out forensic work. To whom a duty of confidentiality is owed, particularly when acting as an expert witness in relation to both sides of a legal claim. 2. Duties to the court. 3. Legal privilege in the context of money laundering. This last area is a particularly important one for forensic accountants. Most accountancy work, for example, auditing or accounts preparation, give rise to the duty to report suspicion of money laundering. However, when an accountant is working in a legal capacity, it may be that information obtained during the course of that work is subject to legal privilege. If so, the accountant would be wrong to make a report of suspicion of money laundering. Whether or not legal privilege applies in a particular situation is a complicated question, and the accountant should take legal advice on his position. Section 6.4. Procedures in forensic investigations. The procedures that a forensic accountant will carry out will depend on the terms and the objectives of the engagement. In many cases, procedures will be similar to auditing procedures and will depend on exactly what is being proved or disproved. In others, the accountant may be preparing financial information from a number of sources to substantiate a claim. In the exam, you may be asked to describe the procedures in a forensic investigation. In answering a question on this topic, it may be useful to think about the elements in a normal audit investigation. 1. Establish the objective of the investigation. 2. Plan the investigation with a view to achieving the objective. For example, in an investigation into suspected fraud, the auditor should plan how to establish whether fraud has occurred, how it could have happened, and how long has it been going on, as well as who has committed the fraud and how much has been lost. The audit work should therefore be planned in a way that will provide sufficient appropriate evidence to achieve the objective of the audit. The evidence should be strong enough to stand up to scrutiny in court if required. In fraud cases, audit evidence should therefore try to establish a motive for the alleged fraudster. Identify the opportunity that the fraudster had to commit the fraud, and also any evidence of measures by the fraudster to conceal his crime. Note that audit evidence may be gathered in various ways, similar to the methods used in a normal audit. These include interviewing individuals, including individuals suspected of fraud. The auditor should use the evidence obtained to reach an opinion. If the evidence is insufficient, you should try to obtain additional evidence. At the end of the investigation, a report is prepared for the client. Examples: if an accountant is asked to give evidence of whether an audit file has been prepared negligently, he will review the file, comparing the procedures carried out with the requirements of auditing standards. If an accountant is asked to give evidence of whether inventory has been misappropriated, he may carry out analytical review comparing margins year on year. It may carry out tests on cutoff and inventory counting to ensure that the figures are not misstated, giving the impression of a fraud. It may carry out tests of control to establish whether they are capable of preventing frauds and whether they have been applied. Section 6.5. Reporting on forensic audits. Key issues in reporting will be 1. Whom the report is intended for and restriction of liability to other parties. 2. The type of assurance required. As for any assurance engagement, this will affect the level of evidence obtained. 3. What purpose the report is required for. For example, to substantiate an insurance claim or provide evidence to a court of law. Chapter review. Chapter review. Before moving on to the next chapter, check that you now know how to 1. Discuss the need for, objective and nature of assurance engagement. 2. Describe the tests involved in performing an assurance engagement in compliance with ISAE 3000. 3. Explain the steps involved in performing an examination of prospective financial information in compliance with ISAE 3400. 4. Explain the steps involved in performing an engagement to report on the compilation of pro forma financial information included in a prospectus in compliance with ISAE 3420. Describe what is involved in forensic auditing. Quick quiz question. 1. How many parties are there to an assurance engagement? A. 1, B. 2, C. 3, D. 4. The answer is C. The 3 parties are the accountant, that is the auditor, the party responsible for the subject matter of the engagement, that is management of the client company, and the intended users of the subject matter of the engagement, e.g. shareholder of the client company. Question 2. Which of the following is usually the most difficult aspect of an assurance engagement in situations where there is no specific laws or regulations? 1. Establishing suitable criteria. A. Establishing suitable criteria. B. Estimating the time needed to complete the work. C. Recognizing ethical requirements. D. Preparing the assurance report. The answer is A. Assurance cannot be provided without criteria for reaching an opinion. Deciding suitable criteria can be difficult unless there are laws or regulations against which comparison can be made. Question 3. Which of the following statements is incorrect? A. A risk assessment engagement provides assurance on the adequacy of a client's risk management strategies. B. A performance measurement engagement provides assurance about the way in which performance measurements have been calculated and reported. C. A VFM engagement provides assurance about whether an operation is carried out in the best way to achieve its intended objectives. D. An engagement relating to systems reliability may require the assurance provider to report on security in an IT system. Answer is A. A risk assessment assurance engagement provides assurance about the risk assessment procedures in a client entity, not about risk management generally. A VFM engagement assesses the economy, efficiency, and effectiveness of an operation so that it achieves its intended objectives in the best way. Question 4. Which of the following problems may affect the audit of an e-commerce system? 1. The absence of an audit trail for e-commerce transaction. 2. Legal and regulatory risk for the client. 3. Risk to the integrity of the e-commerce transaction. Options: A. 1 and 2 only. B. 1 and 3 only. C. 2 and 3 only. D. 1, 2 and 3. The answer is D. Risk to the integrity of transaction is a major risk. Political and legal risk may occur. For example, the problem experienced by companies providing online poker facilities, which were illegally in the USA, and which prompted action by the US authorities. E-commerce systems should provide an audit trail. However, the audit trail might be inadequate. Question 5. Which of the following is a type of assurance engagement? 1. A. Agreed upon procedures. B. Compilation of client's tax computation. C. Direct reporting engagement. D. Compilation of client's financial statements. The answer is C. A review engagement offers limited assurance. Agreed upon procedures and compilation engagement offer no assurance. That's the end of chapter 12. Thank you.